Hello and welcome. You're watching Closing Trades on ET Now. I am Anisha Jain. With me is Pankaj Poddar. And Pankaj, have to say that the market is clearly lacking any sort of confidence at this point of time. Any rally is being sold into. There's not a very meaningful buying on dips which is coming into the picture. And as a result, we are very close to the lowest end of the trading session. Continue to hover below the 16,950 thereabouts. It's the monthly options expiry which is at play as well. Remember, that's tomorrow. Financial year end is also keeping the market action a tad bit muted. A lot of settlements, square off, etc. is happening with respect to positions as well. Whether you call it tax management or position management, all of that is coming into the picture as well. The good part today, or the a clear outperformance is coming in from the banking space. So the banking index is the only one which is actually holding up in the green, and that's being led by IndusInd Bank. There was a positive brokerage action there. We'll discuss a lot more on that later, but IndusInd Bank is up around 2%, and that's definitely keeping the Nifty Bank afloat. And ICICI Bank, HDFC Bank are the two other heavyweights which are also doing their bit. Adani group of stocks, look at the pressure on those, whether it's enterprises, ports, gas, total, transmission, green, pick up any of these names. They're around anywhere between 4 to 10%. So deep correction happening as far as Adani group of stocks is concerned. And Pankaj, again, is the broader markets which is taking the maximum amount of drubbing. The mid-cap index down 0.5%, small-cap index down around 0.9%. So clearly lacking momentum.
Absolutely. Neeraj Diwan is now with us, as well as Kunal and Nuresh. Neeraj, let's start with you. Are you surprised by this sort of a move in the mid-cap space? Do you think it is something which essentially is telling us that, we are back to the pre-COVID sort of era, where only if companies, deliver numbers, they will be getting their, price to earning multiple?
Yeah, good afternoon. Absolutely. See, anyways, when you have euphoria in the market, or you get crazy valuations where stocks are trading at such high PEs, in spite of having losses, some stocks are still trading at a good value. No, that doesn't last for long. I think all the experts, or even you people on the channels, have been saying that earlier last year when stocks were trading at crazy valuations. So that correction had to happen, and that is happening now. But then, in this correction, what investors, what advantage they can get is that when stocks correct, then irrespective of whether the company is doing well or not doing well, you see corrections happening there. Maybe a stock which was trading at crazy valuation may correct by 50%, but even others will correct by 10, 20, 30%. So you get some good stocks in the broader market at decent valuation. So I think that is the kind of opportunity which is there for investors, and they should be looking at those opportunities. And anyways, this is a cycle. You get euphoria, then correction comes, and then again the build-up happens. And stocks which are doing well, which have good earnings potential, non-leverage or less leverage balance sheets will do well going ahead.
Focus on cash flow, would that be the mantra now?
Absolutely. Cash flow, leverage, there should not be too much leverage. We've seen stocks which were leveraged, companies which are leveraged have been beaten down, irrespective of whether they have good asset base, they have, their replacement value is pretty high, but still cash flow is important, and even your leverage is very important part.
That's as far as markets go. Kunal, what's your perspective? Once again, markets went up and now you're seeing a sell down coming in. What's the sense that you get?
Yeah, good afternoon, Pankaj. In the morning also I highlighted that this is a market where I think trading indices would be a bit more of a futile exercise because of the lack of trend. As you guys were rightly pointing out, that rolling over of expiry positions, closing over of the year-end positions, fiscal year-end positions, all of that tends to happen in these kind of days. So it becomes very difficult for the indices to get into any kind of a major breakout as well as a breakdown. Largely also, I think the indices have been into this 400-point range for the Nifty, 16,800 and 17,200. Ideally, a start of a fresh series is where we expect that the trend would pick up. Now, that would probably be decided in which direction the indices give that kind of a breakout. Whether we break past about the 17,200 mark in the next couple of days, or we fall back below that 16,800 levels. So I think as an index trader, you have to be patient enough for these levels to be broken out to initiate a trade.
Right. Nuresh, your view on the market. And, I know you cannot trade the mid-cap index or the small-cap index, Nuresh, but what do you make of the breadth? I mean, it's a very important indicator if you're a market tracker.
So if you look at the mid cap and the small cap indices, they've broken the lows of September and December. Say in the BSE small cap or the Nifty small cap index, it is back to the prices as it was in July to August of 2021. So roughly makes it 18 months plus of zero return. Also the fact that from the top we are down 10 to 20% across the board. And in the near term, if you were to compare it with the Nifty, we are already at a equivalent of 16,400 odd levels for the small cap index. Now the last bottom was at 15,200, 15,500 on the Russia-Ukraine crisis, which I think has been digested by the market. So we won't expect a move all the way down till those prices. So finally, for mid caps and small caps, after 18 months, it's a time where the risk rewards shift positively. For an investor. For a trader, it will be difficult because the next few days will continue to see this pressure. But this is a time for an investor to start building a medium-term portfolio in small caps.
Let's take a look at some of the stocks which are reacting to news flow as well. And there's a lot of stock-specific action today, starting with some of the infrastructure names which are quite excited by the order wins they have reported. Dilip Bilkon is up 2% and PNC Infrastructure has been holding on to a gain of 8%. Dilip Bilkon has been declared the lowest bidder for 780 crore worth of order. And similarly for PNC Infrastructure, the bid project cost is around 800 crore rupees. So both of these counters are in focus on account of that. Shifting focus to Kalyan Jewelers, because there was this, a block that happened there. 2.5% equity has changed hand. Warburg Pincus is expected to be the likely seller. Happened at almost a 10% discount to yesterday's closing price. So the reaction on that one is evident. And then a lot of brokerage action and the stocks are reacting to the news flow. Hero Motocorp, wherein Kotak has actually maintained the reduced stance, but the target price has been cut to 2,400 rupees. That's something that we are watching out for. IndusInd, the top gainer at the index level, wherein Bank of America has maintained a buy. And look at the target price on that one, 1,500 rupees versus 1,000 rupees where the stock is trading at. So an upside of almost 50% coming in on IndusInd Bank. And then Tech Mahindra, wherein Citi has a 90-day negative catalyst watch. They're expecting that Q1 performance is going to be muted, saying that the softness is likely to continue. So that counter sitting with a cut of around 3%. You know what, Neeraj, wanted your take regarding IndusInd Bank specifically. Yesterday, we got a positive note on Kotak Mahindra Bank, wherein CLSA upgraded the stock. Today, it's IndusInd Bank. Do you think this is these are the likely candidates, and ICICI Bank will probably get out of a bit of favor and money will move into these names?
I think it's a valuation difference. See what IndusInd Bank is trading at a discount to valuation, which even Axis Bank is trading out of. Of course, ICICI is trading at a much higher valuation. But even if you compare to Axis Bank also, IndusInd Bank is trading at a discount to that valuation. So that discount needs to be filled because we've seen so many quarters now, performance at IndusInd Bank is improving and we're not getting any shocks or any surprises from there, which, which should let it trade at this kind of a valuation. So I think it will go closer to the valuation which Axis Bank is trading at. Slowly it will go there, and because asset quality is good, growth is coming, and they have enough capital to grow from these levels. So all those parameters will impact IndusInd Bank. So valuation is important. And second thing, like you mentioned about Kotak Bank. Kotak Bank, if you see in the last 2 years, 2.5 years, when other stocks have done so well, Kotak Bank has not been able to outperform. So I think that time correction in Kotak Bank is over. Kotak Bank was trading at a very high valuation couple years back, but then the bank has been growing. If you take that growth into account now, the valuation is becoming attractive for Kotak Bank. So it is still, they always get a premium. So that premium will still be there. But compared to what it was trading 2 years back, now of course the valuations are better. So I think that is why Kotak Bank and IndusInd Bank at these levels should give a decent return to investors.
Okay, Neeraj, what about the entire Adani group of stocks? They are coming under a lot of pressure as we speak. Do you think we all were hoping at least the worst is over, but are you expecting a further, correction in these? Your call. It's your call.
Yeah, see, there are two things. One is that the valuations which they were trading at earlier are correcting. So now going ahead, only those, even in this group, only those stocks will do well which are trading at a decent valuation, and there's a valuation comfort. And second thing is that the group is going towards deleveraging. So they are announcing measures where they're going to deleverage. So whenever they're deleveraging in the shorter term, I think growth which people were projecting earlier is there'll be a question mark there. So the kind of growth which you're thinking will keep on coming may not come, and there may be some casualties there where they let go of some contract, or that growth is now at the back front, and deleveraging is in the front foot now. So that will also change the valuation which a lot of people were attributing to Adani Group of stocks. So I think now purely one should look at them as valuation. Wherever you get the valuation comfort, there only one should go and invest, and not just invest in any of the companies in the group.
Right. Right, Neeraj. Neeraj, just also quickly wanted to get a sense on some of the mid-cap banking names. You think mid-cap banking names is the space to be in, or with the correction, you believe larger ones are better off?
Yeah, actually, I think if you look at the PSU banking space also, besides your State Bank of India, Bank of Baroda, Canara Bank, I think there are names like Union Bank, which have been doing well. If you see purely on their performance in the last couple of quarters, they have delivered. They have shown improvement. Their growth has been pretty good. Asset quality has been really improving. So their capital is enough to grow. So I think these banks also should do well. So the correction has been pretty steep in some of them. The Union Bank also has really corrected from the highs of 80, 90 that it saw, I think. And we've seen a decent 30, 35% correction from those levels. I think one should look at the mid-cap banks also, purely stock-specific, bank-specific, and then take a call.
Note, we'll slip into a very short break with the news that the market still continues to be tepid. 16,940 is where we are at. We'll come back shortly and discuss a lot more stock-specific recommendations. Well, let's pull up the Bank Nifty because that's where all the action is at this point of time. Quite a bit of outperformance coming in. Remember, of late, Nifty Bank has been underperforming, but today that's completely reversed, and I think that's largely because of IndusInd Bank, a 2% move coming in there, and then HDFC Bank and ICICI Bank are also doing their bit. So that's one space which is holding up in the green, because if I'm looking at the pullers and draggers for the markets, the highest contribution is actually coming in from HDFC Bank, 13 point, then ICICI Bank, HDFC, and Reliance also is pretty much around the flat line, 2250 thereabouts coming in for Reliance. So that too is doing its bit. But let's take a look at some of the other stocks which are buzzing around on price volume action as well. Bandhan Bank, that clearly is the stock of the day in the sense that that's getting a lot of drubbing. It's down, 6 to 7%, so it's recovered from the lowest point of the trading session, but still down about 5.5%. It's hit a 2-year low on an intraday basis, so not just 52-week low, it's a 2-year low on an intraday basis, and has been declining for 4th consecutive week. So that's the kind of weakness on Bandhan Bank. ACC2 from the entire Adani pack has seen a breakdown from the descending triangle chart pattern, has hit a 2-year low on an intraday basis, and again has been declining for 4th consecutive month, so watching out for this one. Torrent Power has snapped the 6-session streak of forming lower lows, so surpassed above the 50-day moving average, so a bit of a positive trend is what is visible on this one. Naresh, your sense as far as Bandhan Bank is concerned, because that's seeing quite a bit of sell-off. And the other one I want to check with you is Vijaya Diagnostic. That too is down about 8.5% on heavy volumes.
So Bandhan Bank has been the worst performing bank for quite some time. The stock was trying to hold above the 200 mark, 210, 215 mark, broke down a couple of weeks back, and has continued. The worst part is the stock is now closer to the prices as it was in the 2020 bottom. So that's a very odd thing to happen, because that's the bottom which was made in COVID. So in such a case, you don't want to do bottom fishing, let it bottom out, and then we'll see. The lows were 150 to 180 band in March 2020, and it's coming there. So you can't be shorting here purely for the reason that it has already come back to March 20 lows. So would be an avoid. Vijaya Diagnostics as well as Krishna Diagnostics saw a move yesterday, were up on volumes. Today they are down on volumes. The trend is still weak for the whole diagnostic space. If you look at Dr. Lal Path Labs, Metropolis, they're all down 50-60% from their tops. So still there is a lot of time left for them to make a bottom. So no fishing over there as well.
Right. Let's just pull up the Nifty once again, and you'll just get a sense that from the day's highest point, we came down to this level, and now we are in and around this level. So Kunal, any view on the relative little strength that Bank Nifty is showing today versus Nifty? or it's just because of ICICI?
Well, it's because of IndusInd Bank, and I think partly ICICI Bank as well as HDFC Bank. These stocks are also playing their part for themselves. But again, Pankaj, I think for a index which is almost at 39,000, 40,000 levels. Now, if you see a move of 40, 50 points on a positive side, you may call it as an outperformance. But then there is no major signs of a breakout in terms of levels which have happened for Bank Nifty. Now, look at this way: yesterday's high for the Bank Nifty on the spot levels was around 39,700. Today's high for the index so far is 39,570 approximately, which means we've not yet broken past or even yesterday's high for the index to call it as a breakout. Now, in the same vein, we've not yet crossed yesterday's low for the Bank Nifty on the spot levels. So that is the bigger point of concern for the markets: lack of trend, very sideways kind of price action, and very limited or narrow kind of band for the indices. So yesterday, for example, it was more of a 300-point band for the Bank Nifty. Today the range is 150, 180 points for the Bank Nifty. So we know that sooner or later the Bank Nifty would break out, but it's always better to wait out for that confirmation. So as I said, 39,700 remains to be a breakout point on the upside. If you manage to say close above it, say in the next half an hour or so, then we can expect a follow-through up move for Bank Nifty. Other than that, I think it's a move which I think I would not like to participate.
Okay, so that's the take coming in on Nifty Bank, still not calling it out of the woods and waiting for a bit more, confirmation on the breakout. But Neeraj, off late we have been hearing about a lot of these order inflows for the infrastructure companies, PNC, GR, HG Infrastructure, Delhi Bilcon, etc. Is this just an year-end phenomenon, or maybe ahead of the election year, it does make a good momentum bet?
Yeah, actually, most of these companies are already sitting on very good orders, and the momentum was just beginning to pick up. And plus more orders coming their way, and I think it should continue. Like you said, it's a pre-election year. So I think there also the order momentum should continue. And execution in the last quarter, which is going right now, also picks up. Though there will be some pressure because of interest rates going up in some of these companies, but the raw material prices, freight prices, they have been coming down. So that will impact, that will, sort of balance the negative impact which can come from interest rate hike. I think overall the margin should improve looking at the raw material and the freight costs and all. So the execution picking up this quarter plus the advantage from margin should augur well for them. I think going ahead this quarter and subsequent 4-5 quarters can be good for most of these infrastructure companies.
But Neeraj, since you are with us, tell us some of the top mid-cap, small-cap names that you are identifying at this point of time which look attractive after the correction and makes a good buying bet. Any names that come on the radar?
Like besides I mentioned about banking stocks, I think even in your soft commodities like sugar, rice, they're also you're seeing pickup happening there. Global prices have gone up as far as sugar is concerned. Ethanol story is still intact. And similarly, rice also there was good inventory built up seen in companies like TRBL, which should translate into good earning growth going ahead. Then there are these pump companies like Kirloskar Brothers, which showed good improvement last quarter, should continue. Then we have some of these companies in the infrastructure space under our coverage, like there's NCC, Kalpatru Power. Then in the water space, you have Iron Exchange, which is doing very well. So these kind of companies across, I think one need to pick up the performers in different sectors, and even in the FMCG, related sector like Godfrey Phillips is one which valuation-wise is attractive and has a good potential because the growth has been good there also. Margins are also improving. So these are some of the ideas which have been there and were performing, and they've taken a dip now because of the market correction. So I think once markets make a base, they should again continue performing from these levels.
Okay, Neeraj, we'll let you go on that note. Thank you so much for joining us today and talking to us about some of the stocks which you like at this point of time. But you know what? My colleague Ajay had a chat with Luke Brown. He's a senior portfolio manager and head of asset allocation, multi-asset solutions team. Let's listen in to what he has to say about India and how it's stacking up across the globe.
Yeah, look, this is certainly something that's dominating our investment decision making and calls discussing, as you say, the state of the global financial services economy, the banking sector in particular. So if we look at what's transpired over the past couple of weeks with the demise of SVB and then the contagion across to impact Credit Suisse in particular, and the extraordinary activity and intervention from the Swiss authorities to create the takeover of Credit Suisse by UBS. And you used a word which I think is exactly right, which is fragility. And I think what's driving things at the moment is sentiment, and that sentiment is fragile. Now, from a fundamental point of view, and just looking at the health of the banks and the balance sheets, we believe that the fundamentals are actually constructive. Now, what's critical here is that you need to weigh the immediate price action and pressure from the sentiment versus the longer term fundamentals. But our outlook, I think, is more constructive. We're obviously watching closely to see if there's any contagion. Deutsche Bank has obviously been in the news a lot with their credit spreads widening, their share price falling, but the German government has come out to reassure investors and depositors with Deutsche Bank that the company is in good financial health. So whilst I do think, as I say, we need to continue to watch carefully, the fundamentals remain pretty robust for the banking sector.
Luke, Goldman Sachs yesterday said that the probability of US slipping into a recession is rising and now is over 35% versus 20-something in Jan. What are you reading of the probabilities of US recession? And if yes, how deep or how shallow could it be?
Yeah, look, clearly the market expectation of a US recession has been increasing, certainly over the past few weeks, and that's for a couple of reasons. Obviously, what's happened in the banking sector and SBV has been a catalyst for that. Also, the action of the Fed, where they've increased rates by another 25 basis points, but I think more critically have identified that these strains that have been precipitating in the banking sector are also constrictive for the economy, and the impact they estimate is something like an additional 25 basis points of monetary tightening. So when you put all those things together, the Fed is continuing on their path of demand destruction. They must and they will pursue controlling inflation. So therefore, the likelihood of a US recession has increased. Now, would I put a specific percentage on it? Whether it's between 25 and 50 is probably the right answer. But I think what we need to look to is what actually happens over the next 3 months and then the 6 months beyond that. So the next 3 months, I think what we're looking for is to see moderation in some of the data points that the Fed are looking at. That would give us comfort, I think, that their policy of increasing rates, monetary tightening and fiscal tightening is having the desired effect, because on a forward-looking basis, the 6 months beyond that, that might then allow them to moderate the restrictive policy stance that they've had at the moment, thereby avoiding a deep recession. So our base case is, yes, the probability is increased, but at the moment our outlook is that if there is a recession, it is likely to be shallow, and the Fed will have ammunition to loosen financial conditions, thereby limiting the damage from a short and relatively shallow recession.
Luke, what are you making of the odds of rate trajectory, rate hikes from here on? Do you think now there could be a prolonged pause, second half of the year, perhaps a cut, or maybe first half of next year? What are your thoughts then? What is the street pricing in?
Yeah, look, so I think that central banks globally are coming to the end of the tightening cycle. The ECB obviously moved 50, the Bank of England 25, the Fed 25, and other central banks obviously have taken action as well. I think the global economy, whilst robust, is now starting to show signs of rolling over a little bit. And that is, I think, going to lead to central banks being able to loosen the monetary conditions and start to reverse some of the rate increases that we've seen over the past 12 to 18 months. But I do think that that's a Q4 phenomenon. And for the Fed in particular, the market has been pricing in the potential to reduce rates as early as June. There was, whilst a low probability, there were some practitioners actually pricing that in. I think that that is too aggressive. I think that if anything is going to happen, it is going to be very much the back end of this year and more likely early into 2024.
Welcome back. 45 points down for the Nifty, 16,940. Any sort of recovery in the market is probably being used to see some amount of supply coming in. In fact, let's pull up the stock of IndusInd Bank. That's a stock that's doing well today, it's a stock which is right now at the day's highest point, 3%, 2.5% higher. Vamakshi is now with us here to tell us why the stock is buzzing.
Well, absolutely. As you rightly pointed out, the stock is gaining in an otherwise weak market, and that is on the back of a brokerage note that has come in from Bank of America. They've maintained a buy rating given a target price of 1,500 per share, which is a significant upside from the current levels of 1,036, as you can see. Now, what they're highlighting is that it is now time to focus on the company's fundamentals. The company does demonstrate good margin of safety at current valuations. Macro factors as well as the rate cycle have now finally aligned to IndusInd Bank's business mix as far as their liability and asset quality is concerned. Their buffers have seemed to improve much more as compared to peers. Core profitability for the company is still the best in class, and that has come in despite the company de-risking. So given all these factors, Bank of America has maintained a buy rating given a target price of 1,500 per share, and that is the reason why the stock is in focus today.
Coming in on IndusInd Bank, so the stock is reacting to the news flow as well. But let's welcome on board Gurmeet Chadda as well and get a sense from him as to what he's spotting in the market at this point of time. Gurmeet, I had to ask you to take a top bet, sectorally speaking, if not stock specific, which is the space which seems the strongest to you?
I personally think capital goods and industrials is one space in terms of relative attractiveness is looking good. And, having seen 2003-7 cycle, when you see signs of capex, those cycles are much longer. So if you pick up the top three guys, or just pick up L&T and see the order book, the way it's shaping up, they're already at almost 3.8 lakh crores. Last quarter, they got almost 60,000 crores of order, and these are coming across, which is infrastructure, hydrocarbon, energy, services. Also, the execution improving, which I think the government has, very expansionary budget when it comes to capital investments, and we are seeing also a little bit of housing-led capex. So, despite the interest rates being high, and because of focus of government on affordable housing, we have seen housing doing considerably well. Whether you look at the registration in top cities, some of the new launches which are getting sold very quickly. So I think this housing-led capex, and China had this cycle for 10-15 years where you had more and more houses, and that translated into force multiplier for other sectors. So that's one space I am quite constructive on the long term. And you would have seen even in the current correction also, the impact has been the least there, courtesy strong earnings growth and order momentum.
Right. Gurmeet, are you surprised by the sort of moves you're seeing in the banking names? It's where some of these banks like, Bandhan Bank, some of the others are really cracking down now?
Bank is always high beta, and when things do well, banks do more better, and because of the concentrated ownership, institutions have, FIs have, and any bank where there is relative risk of credit costs going up or slippages going up, and once the environment tightens and growth slowdowns, the impact is even more, and that's the reason probably banks with higher unsecured portfolios, bit of microfinance, see price changes. But I think Indian banks are quite robust if you compare to what is happening around the world. One good thing in the bank is if you look at top 5 banks, the contingent provisioning is almost 75-80%, which means there is cushion on any future credit shocks if they come. I think the underwriting standards have improved. The restructured pool has come down, so they've witnessed the COVID test, which was the real stress test. So I would still focus on top 4-5 private banks and maybe selectively, 1 or 2 PSUs in terms of looking at banking right now. FIs own almost 50% of banks, so you will see pressure on Bank Nifty. But some point of time, this selling has to stop and even reverse, and that probably is the time for the banks to do well.
Not sure if the selling has stopped or not permanently, but for now, there's a definite buying interest when it comes to the Nifty Bank. A good outperformance coming in there. 130 points high when Nifty is down around 30 to 40 points. But you know what? One stock which has been reeling under pressure of late is IEX. In fact, for the week, that stock is down around 10%. A lot of news flow around that. So let's go across to my colleague Sharad to understand what are the various headwinds that are plaguing the stock of IEX at this point of time. Hi, Sharad.
There's multiple headwinds coming in from IEX, and do remember that the March volumes, that itself has also gone down. It's almost down 12% on a year-on-year basis. Now, of course, the impact is, of course, due to the unseasonal rains which has come, and also there has been a dip coming in the temperature over the last few days. Now, what this happens is the demand for the electricity, that also kind of falls down, and the peak electricity demand numbers have actually fallen down in India, and this has actually impacted the volumes of the exchange. Now, the analysts are estimating there would be potential down risk coming in, at least for the EPS estimates as well. Now, let's looking at the numbers also. The average prices in Indian Energy Exchange has actually fallen 16% on a month-on-month basis. And if you look at the All India electricity supply, that itself is down almost 1.6% on a year-on-year basis. And if we talk about the last 7 days itself, the numbers have been bigger, ranging between 4 to 7%, whether you compare it sequentially or whether you compare it on a year-on-year basis. And however, last trading session also the stock was under pressure, as we had learned from the con call of Dalmia Bharat that they would be actually eventually reducing their stake and finally exiting to the total stake in the India Energy Exchange. Now, currently they are having almost 14.81% stake in India Energy Exchange.
Kunal, IEX, any view? 128 rupees?
Well, yeah, I think it's been a sudden fall for IEX, Pankaj, because earlier the stock was actually getting into a recovery phase from 130 approximately, which was the low for IEX, I think in the fag end of 2022. From there, it managed to show some good recovery, came back towards 154, 155 levels. This has been a sudden U-turn for the stock price. I would believe that if in this leg of the price correction, the stock comes back to say 120, 125 zone, I would actually look out for that as a good contra buying opportunity. So I understand that the recent price correction is very steep, but looking at the historical charts, I think 125 seems to be a very good zone where the stock may become a good contra buy. So would be looking to go for contra on IEX closer to that 125 mark. So maybe a band of 120 to 125 is what I would watch for the stock.
Gurmeet, do you have a view on Nykaa? Because that stock also is down around 7-8% for the week. Today is down about 4%. There have been a lot of high-level exits that's got the street a tad bit concerned. Of course, it was the CFO earlier, and now there are 5 other exits also. But the street believes, given the fact that the entire space is getting very competitive with fresh entry and fresh expansion by the likes of Tata's and Reliance into this space, Nykaa is going to face a lot of headwinds. What would be your strategy when it comes to Nykaa?
Not looking just as a price correction only, because price correction can be tricky. We've seen that in the past with a lot of other new age companies also. I think, and you rightly said, the competitive intensity is increasing. The more they have on the the cosmetic and the personal care could get challenged. Although they are now also having an omni channel approach, both online offline. Also, I think the valuations are still very high, despite you can't be valued at this valuation for profits in single digits. So there are better opportunities, and this is a market which will not be very favorable towards any kind of high valuations, loss-making entities, because there is alternative now, and the cost of funds is up. Cost of not doing anything is 7% plus, sitting in a bank deposit or in a bond fund. We would rather look at some other new age businesses like QSR space, which I think the entire market cap is just 60,000-70,000 crores, which is less than that of, let's say, even a Cipla or a large pharma company. The cooking time has reduced. The women participation is likely to go up. So in fact, in places like Singapore and all, some apartments don't even have a kitchen these days, right? So that's a more structural trend to me. And a lot of the companies like Devyani, etc., now they have reached an inflection point these guys have virtually zero working capital, in some cases negative working capital. So the expansion in cash flows and EBITDA can be geometrical after you achieve that scale. So that's something I'm looking at more structurally. Very unrelated to Nykaa though, but since we're discussing the new age companies as such.
Okay, so that's the take coming in on Nykaa. But Naresh, a word from you on some of these names like Star Health, SCI, which are coming under pressure, even Raymond for that matter. Just a one-day blip that one should ignore, or is there a more structural call that you have to take given the chart patterns?
So Star Health has been in a downtrend for quite some time now. The stock is not far away from the lows it made in June and the lows after listing. So too early to call a trend change here. Raymond, on the other hand, made a longer term breakout. So the stock last had a major resistance around 1100 levels. It went up to 1600 and is now doing a retest of that 1100 mark. So the longer term structure still seems positive for Raymond. The highs in 2018 were around 1100 odd levels roughly. So one could actually be looking at a little bit of an exposure here and have patience wherein one could expect a downside even towards 1050 before it starts the upside. But longer term charts, Raymond looks interesting.
Longer term, Raymond looks interesting. For the day, if you look at banks versus IT comparison, it's clearly banks which have an upper hand because they are doing quite well, while IT is under pressure. And Tech Mahindra specifically down about 3%. Citi calling a 90-day catalyst watch and saying Q1 is going to be weak. We posed the question to Vikas Khemani as well of Carnelian Capital to understand where is his preference coming in, because he's been quite positive on IT for the last couple of years. Listen into what his opinion is. Has it changed towards the banking space or not?
We are just holding on to that, and right now neither we're dreaming nor we are adding. We're just holding on to that, and there would be time. Now I don't know whether it is 6 months, 12 months down the line, when U.S. environment settles down, when U.S. talk about interest rate starts coming down happens. In my opinion, that would be the time to add IT in a big way. So we will be looking for an appropriate moment and time to add our position. But right now we are just holding on. IT versus bank, it is always, you play what is, what you think has a growth profile. And right now, like you said, we are significantly overweight in banking sector because we think the credit growth has just started and we have a long legs to grow. So at least next 18 to 24 months, banking sector looks pretty decent. So we continue to do that. IT, like I said, that we were earlier significantly overweight, we became equal weight, and some point in time we might look to become overweight. That we keep evaluating, but right now, we have a positive view on both. But we like banking more. We think that if market is going to rally from here, banking sector is the one which will take lead. Large part of the heavy lifting will have to be done by banking and industrials. So we have ICICI Bank as our top bet. We've been holding that position for last 3 years or 3.5, 4 years, and I think we continue to do that.
Okay, in the last few minutes, some of the banking and the financial names are doing well. Let's pull up Bank of India, the intraday chart. That one is perking up as we speak. PNB Housing is the other one, which is showing quite a bit of momentum. Policy Bazaar, UTI AMC. So this entire space seems to be buzzing quite a bit. And even Chola has been doing well since the start of the trading session. So Chola Financial is the stock that I'm talking about. That too is up around 2.25%. So some of these names, and even Manappuram Finance actually sitting with a gain of around 4%. Gurmeet, I wanted your take regarding the auto pack because it's been very, very sideways so far this year. We are now looking forward to the monthly data, which will be out just around the end of the week. Is there a structural call that you would like to make on autos as well? Maybe a shift away from the haloed stock of M&M to be, let's say, the likes of Eicher, etc.?
I think you got to be selective here. So I think there are some companies which will continue to do well. M&M, of course, since you took that name, got hit by the concerns on monsoon and tractor numbers growth being slow this year. But I think it's a little early to say that. We see things. Taking weather as the reason for your portfolio allocation is not a wise thing to do. But they have, as I said, done well. Also, there is no new launch as such. So now the 5-door Thar and the EV thing will come more towards the end of the year. So that's something in our radar. Valuation is still reasonable. Also, it's important to crack the engine here in terms of who has the better technology. So if you remember Maruti in 2013-14 used to get that 1.3-liter engine, right? So that's how that Swift Desire, Brezza, everything did well. I think M&M cracked it with that 2-liter engine. Where you had 5 back-to-back SUV launches. TVS turned around after Apache, right, where they started doing very well. The margins went up from 6 to 10, 11%, and volumes started picking up. So I would be selective here. Maybe look at M&M and PB. Maybe two-wheelers, TVS, then among auto ancillaries, Minda, uh, very healthy price correction despite, I think, again, Minda has also got impacted because of slowdown expected in two-wheelers and some of the other automakers. So I think overall, I'll be selective, but I'm pretty constructive on some of the names.
Okay, be selective when it comes to the auto space, though the risk reward looks a bit more favorable on some of these counters given the fact that the Nifty Auto as a whole is sitting at a 8-month low as well. But Kunal, your take on the Adani group of stocks which are reeling under pressure on a chart and a technical basis, is there any name which you think will be showing signs of a bounce back?
Well, I think Adani Ports is something which is actually coming back into an oversold territory. But Anisha, these are very small-term time frame oversold natures which you are looking out for. So they could probably have an effect of maybe just about one trading sessions or at max maybe a couple of trading sessions. But then you have to be very very nimble-footed in terms of trying to trade these kind of names, even if you're trying to play for a bounce back. But I think Adani Ports is something which I think the last I had seen when the stock had hit 585, 586 on the spot levels, that had come back into a deep oversold territory. So would expect a bounce back to maybe till 610, 620 levels for Adani Ports, but that's the only chart which is looking a lot more stable as compared to the other names. Adani Enterprise, Green, Transmission, etc. These stocks have been very, very volatile. So when you're looking at swings of 15-20% in a very short span of time, both on the upside as well as downside, the risk reward becomes very, very skewed into these kind of names. So I would go for Adani Ports. In case if the stock comes back to say 585, 586 mark, it could be a good risk reward buy. Targets of 620 on the upside, stop loss at 570.
So that's a take coming in on Adani, but let's get the BTSC ideas also out of the way. Remember, tomorrow is the day of monthly options expiry, so there'll be a volatility on account of that. So ahead of that big event, Nuresh, would you want to take a BTST call or STBT call on any of the stocks?
So would take a BTST call, but be a little more defensive. So HDFC Bank is something which has been holding on after that retest of 1530, 1550. Out there expecting a move towards 1600 plus, a stop loss at 1560. Second is a buy on Mahanagar Gas, another stock which has held on after that huge volume jump up and a 8-10% move. The stock has been holding on. Out there also could see a quick move towards 1000, 1020, stop loss at 965.
You, Kunal, what's on your BTSC radar?
So I'll go with a couple of buy calls. Anisha, the first one is on Page Industries. That stock is seeing some very strong volume action today. So even though the prices have been a bit stagnant at the 38,000 odd mark for Page Industries, but because of the surge in volumes, my expectation is that the stock would probably restart its uptrend. So that's a buy. Targets of 40,000. Stop loss could be kept at 37,000. And the second would be a buy on Chola Finance. As you were rightly discussing that financial services name, they're making a comeback again individually. Chola Finance has formed a classic bullish engulfing pattern almost on a daily chart. So that's one of the reasons for suggesting a buy. 755 as a target. Stop loss at 721.
Okay, thanks Kunal for that. But apart from the monthly options expiry tomorrow, there's also going to be a bit of rejig happening with respect to the MSCI companies seeing some sort of outflows as well as inflows. Which are these companies? Which are the ones which are likely to see inflows, and which are the ones which might see outflows? Harsh will tell us that entire list. Hi, Harsh.
Hi, so yeah, we're going to look at first Page Industries. It's expected to see a $35 million worth of inflows. But mind you, in terms of average daily volume versus the number of shares which are up for that reject, it's quite a small number. So I'm not sure as how much of a meaningful increase that will see. Can Bank though, you're expected to see a good increase, $31 million worth of inflows, 9.2 million shares up for grabs. Versus 1.1 million, which is the average daily volume. Similarly, SBI also, $28 million worth of flows expected. ABB expecting $27 million worth of flows, and Axis Bank $23 million worth of flows. In terms of outflows, also we're going to see Reliance, which is going to expected to see the largest amount of outflows, $42 million there. Infi expected at $39 million. Mphasis also at $27 million. Mind you, with regard to Reliance and Infi, in terms of average daily volume, it's much lower than what the offset needs to be going into tomorrow. So the sales may likely be more. Bandhan Bank also expected to see outflows and is already seeing stock action impact even today. And we're also expecting to see impact on Mahindra and Mahindra. So these are the stocks keep on your radar for tomorrow.
Okay, Harsh, thank you so much for joining us with that quick take. I also have my colleague Prakash joining us with an exclusive coming in. Sources tell ET now that the Oil Ministry has presented the Kirit Parikh recommendations to the PMO on the gas pricing formula. Prakash, tell us what's the latest and what exactly are the recommendations?
Yes, sources are informing to us that the Oil Ministry has given presentation to the Prime Minister office on Kirit Parikh committee report on domestic natural gas pricing. As you are aware, that the Oil Ministry has already sent a cabinet note to the PMO, and it is expected that the cabinet will consider this report in its next meeting. As you are aware, that if a government has to implement any recommendation of the Kirit Parikh committee report from 1st April 2023, for that cabinet approval is required. So it's a very important report as far as the domestic natural gas pricing is concerned, which says there will be $6.5 per MMBTU selling price for domestically produced natural gas and $4 per MMBTU floor price for domestically produced natural gas. As far as old pricing regime are concerned, it is effective till 31st March 2023, which is a 6-monthly formula. But if a government has to implement Kirit Parikh committee report, there is cabinet note required. When it comes to Oil Ministry opinion, sources are confirming that the Oil Ministry wants a cabinet that it should be the Kirit Parikh committee report should be approved, and it wants that report to be implemented from 1st April 2023 because the prices of natural gas will come down. If you consider with the old price regime and new recommended report, which says the prices of domestically produced natural gas will come down by $2 per MMBTU.
Okay, Prakash, thank you so much for joining us with the latest on that one. On that note, we'll let Gurmeet as well, go because it's just around that closing time, 3:28. Thank you so much, Gurmeet, for joining us on the show and talking to us about how the market setup is looking like. And just before I let Kunal go, a quick word, because we're trending towards the 4th month of a negative return for the Nifty. What happens if we do that? What does the historic data tell you, Kunal?
Yeah, the historic data has not been in favor for the markets, because whenever we've seen the indices closing for 4th or 5th straight months of negative, the returns on the downside, returns for the indices have been quite stark on the downside, and 3 occasions where we've seen that happening: 1996, 1998 as well as 2001, the 3 years when the index went through a 4 to 5 month consecutive negative closing, and that has created a dent on the index on the downside. So let's hope that we don't close it in a very similar kind of a manner for the index. There are still a couple of trading sessions still to go by for the index. We can hope that the markets get to a recovery, but history has not been in favor for the index movements on the downside, specifically on 4th or 5th straight months of consecutive negative closing for the index.
For the day, at least, it's a negative closing coming in, but it's the middle of the range where we are ending at 16,962 for the Nifty. The broader markets that were underperforming today. Look at the breadth of the market. 1,600 stocks declining to 500 stocks advancing. What was clearly outperforming today was the Bank Nifty, a 0.5% gain coming in. And it's names like IndusInd Bank, ICICI Bank, HDFC Bank. These were the heavyweights that were pulling the Bank Nifty high. Even the financial services names like Chola Financial, Shriram Financial, ICICI Bank, some of these stocks were definitely excited in the trading session. And then Bank of India, towards the last few minutes of trade, saw a bit of buying action. What was under pressure was the Adani group of stocks. So Adani Ports, Enterprises, pick up any of these names, they were down in the trading session. Tech Mahindra was one of your top losers on account of the Citi report. There was a positive note coming in as far as a lot of these counters are concerned from UPL, wherein there was buying from the promoters as well. So UPL too was trading hard. A lot of these stocks bouncing around in the trading session, but the end is towards the lower end of the range, just around that 16,958 mark. Kalyan Jewellers down 9% on account of that block deal. Vijay Diagnostics seeing a cut of around 9%. At Bandhan Bank, that really was the mysterious stock of the day as to what led the selling to the tune of 6-7% on that one. So we'll keep getting you more data on all of that. But for now, we're wrapping up this edition of the Closing Trades. From the entire team who put the show together, thank you so much for tuning in.